So, chicken and egg. Cryptocurrencies or funds came first. Obviously, the currencies came first, and now the funds are coming. So we have four people that each have a different strategy and approach to investing in the cryptocurrency space. So I'm going to start by asking each one of them to describe what they are doing and their particular approach, and then we can kind of get the ball rolling that way. So starting from Tim.
Hey, so we're building a fund management platform for all these funds so we will enable people to create funds on our platform. Right now we operate our own fund. It's right now the size of it is, I guess it's the biggest fund. It's 33 million. And the purpose is so just invest into the new ICOs that are happening. And so this is more like a classical crypto fund. But we have like another one. It's called index fund. And this one, we try to position this as a S&P 500 for blockchain companies. And right now we're at invite only, but it's already there. I mean, it's working, and we will start. We will open it pretty soon.
And you're based where?
We're based on blockchain.
Good answer.
But yeah, most of our team is in Slovenia.
Okay. Great. Olaf?
Yeah, so about 9 months ago, I launched the Polychain Fund. This is an actively managed hedge fund that invests exclusively in cryptocurrency protocols on blockchain assets. We have some backing from Andreessen Horowitz and Union Square Ventures, among others, and have been actively trading for the last 9 months.
Good timing. Brock, our third fund, so founder of Blockchain Capital. We started in 2013. Traditional venture fund investing in the companies or the startups in the space. Then we had our second fund, BCAP or Blockchain Capital's ICO. We did a couple of months ago as our third fund, and the idea behind that was, well, I was a founding board member of Mastercoin, which was the first ICO. The model got architected in the spring of 2013. We launched in the summer of 2013, and so been obviously very active in this market since, I guess, its beginning. And everything had been done, with the Howey test and various ways of trying to look at the regulatory landscape. And in our case, wanted to see if it could be done differently. As a fund, I didn't think I could pass the Howey test, and so structured it as a security. We did that out of Singapore because the MAS or the financial regulators there had provided guidance that tokens or virtual currency are not a security. But then taking advantage of the Jobs Act and all the legislation here around crowdfunding, and specifically utilized Regulation S&D to address any Securities and Exchange Commission concerns, and then obviously put it together with the blockchain. This is an experiment. It's a small portion of our fund, but I think one that's interesting from a precedent-setting perspective, and I think something that everybody should be looking at. And I think there's some strong and compelling arguments that all of the ICOs, even if you pass the Howey test, should be looking at being a security, because it deals with a bunch of money transmission issues, a whole host of issues that are, I think, a net positive for everybody. And I'm here to, I did it for more than anything to show the market something that you can fork, something that you can do, and show people that there's a different way to approach this.
Brian?
Yeah, I'm Brian Kelly. So I run BKCM Digital Asset Fund, which is an actively managed hedge fund investing in digital currencies and assets. My background's the global macro area, so I also run a global macro strategy within BKCM. And so I kind of bring the traditional currency trading and management to the digital currency space. So more of a traditional risk management, definitely actively managed, but at the same time giving investors exposure to, let's call it the top 20 or so protocols and interesting apps that are out there.
But how long, when did you switch or add the cryptocurrency aspect, and why?
So All right, so in 2013 is when I started writing a book on Bitcoin, published in 2014. Since then, I've been investing myself. About a year ago, we started running the strategy internally. And just in March, we did a soft launch for the fund, and now we're up and running, ready for everybody.
So Brock, I think your the angle that you talk about, because we've been on, this is the third panel in the last 6 days together. So you talk about liquidity specifically. Can you expand on like?
Yeah, so as a venture capitalist, I wanted to put venture capital out of business. You know, you think about venture, it's an industry that's benefited greatly from technology and the internet, but in the last 50 years, how has venture capital, innovated itself? We allegedly invest in, disruption and innovation, but at some point you should be looking at your own business. So what are the problems with venture capital? If you're in the right vehicles, historically they've delivered great returns, but most people don't want their money tied up for 5 to 10 years. Liquidity is a major issue. Also, it's a product that's historically only been available to the financial elite, the pensions, the endowments, and the big family offices. And so those were the two problems I wanted to solve. One is liquidity, and so we launched the first digital liquid venture fund that's a security, and as a result of that, you can buy into this fund and you can trade essentially your ownership in the fund on exchanges. So you get constant liquidity through a secondary market. The other half of it is democratizing venture capital so that anyone and everyone can participate. Unfortunately, in the U.S., because of regulation, we're limited to accredited investors in the U.S., and we were limited to 99 because of mutual fund laws. But I still think we went a very long way in democratizing venture, in the same way that AngelList and crowdfunding was the first major leap in the democratization of venture. I think this was the next major leap, and I think this is the beginning of what will be the disassembly of venture as we know it. And it's not just venture capital as an asset class that suffers from these problems. It's private equity, it's real estate, it's REITs. And I think that this is going to bring about the end of sort of this, these vehicles that are controlled by the financial elite and them being illiquid.
Yes. Well, if you were one of the first that figured out that you can trade cryptocurrency with is it a standard hedge fund structure?
Extremely vanilla structure.
Extremely
standard sort of vanilla structure hedge fund.
So anybody can do it. Anybody that has a hedge fund can do this.
I don't know that any hedge fund would be structured precisely to allow this, but most probably would be.
So what are you investing in now? Can you run us through your protocol strategy and so on?
We really focus on fundamental analysis. So we will read white papers until we deeply understand what this project is trying to achieve, how it's going to do it, and to make sure that especially the underlying token mechanics all make sense. Because half the problem here is sort of a cryptography and distributed networking problem, but there's another half of this problem that's just around finding a sort of equilibrium in the sort of game theoretic mechanics between the participants in that token network. And so if you can't have a token that's sort of like hacked on, it needs to be a core component of what is driving that network's value. It's also very important that if that network grow, that the value accrues to the token. Because if the value does not accrue to the token, it doesn't make it an interesting token to hold, both for users and investors.
So how do you measure this relationship between the value of the network and the value of the token? Is it all based on theory? I mean, if they are all small.
Yeah, I mean, you really have to judge it on a case-by-case basis. I don't think there's like a standard rule that could apply, especially because the space is moving so quickly. But generally speaking, the value of the token needs to be at least linearly related with the popularity of the protocol in which it's powering. So if the token isn't going to accrue values from the success of the network, then what are you really holding, or what are you betting on?
Is it fair to say that you're betting on protocols more than applications? And is there a graying line?
So I think like early kind of venture and early all kind of investors in this space, they saw the Bitcoin protocol get created, and then everyone sort of went and started investing in consumer-facing applications, things like tipping apps, remittance apps, things that were meant to be used by end users. And I think that it was sort of like getting a little over the skis in terms of that thesis. It was sort of like, let's invest in Facebook, but there's still not video or pictures on the internet, right? It's like a little too early. So I think right now we're actually coming to terms with that a lot of those early consumer companies actually were too early, and that what makes the most sense right now is more of like infrastructural components and developer tools that can lead to emergent end user applications. So most of what we invest in is at sort of the protocol level or maybe one step above on sort of the infrastructure or developer tools level. I still think that it's a little early in this space for end user applications, but in 1 or 2 years we will be there.
Okay. So what's interesting about you, Tim, is that your fund platform, when it becomes available, it's going to allow anybody to become a fund manager.
That's correct.
So anybody, like an average consumer, no license, or how is it?
Yeah, so we're starting this with excluding QS, and that's honestly, I mean, you have the biggest issues here. So I guess we will learn elsewhere, like how it should be done, and then we will enable US persons as well and companies.
What's your business model? How do you make money then?
So basically, it's like an app store for funds. So we split the revenue of management fee between the managers and the platform.
Okay, so you're not really worried about what they invest in, except for your index.
No, the thing is that so we're solving like three key things. One is best execution on the assets under the management. Another one is so we do the custody of the assets. And there's one more, but I'm not sure what it is right now.
Brian, have you figured, can you talk about your investment strategy in terms of, have you identified segments specifically that you're interested in, ones you're not, and so on?
Yeah, so I mean, generally the way I look at the portfolio is kind of in 3 buckets. So we have 50% of the portfolio, which is a long-term play. And right now, just like Olaf, it's in the protocols, right? The value is accruing to the protocol tokens at this point in time. I'm of the belief that they will accrue to other places, but for right now, that's where it's accruing. So I look at it as that 50% is, I want investors to have exposure to that, to the base level foundational protocols. There's another 10 to 15% that we do ICOs. We don't do all ICOs, but we do some. One big one that we did was Cosmos, because again, that's kind of a protocol level token. And then the other 30, 35% or so is the much more actively managed part of it. And that's where we bring our money management skills to the table in the crypto space, to underweight and overweight the tokens that at the time the market is valuing more than the others.
Okay. I want to throw this out to one of the strategies I'm seeing by funds is to invest in the pre-ICO stage, and they give you a discount ranging from what I've seen from 25% to 50%. So is this an ongoing strategy? Is this an edge? Is this a temporary edge? What are your views on that?
I think that most of us need to hold these ICOs to a higher standard. We're investing in white papers. I think what's going to happen here, in my view, is that Series B and C and D sort of financings are going away. And what's going to happen is companies are going essentially public as a global offering. I think IPOs are dead. The future is, why would I want to go public on a local exchange limited to the United States when I can do a global offering? It just long term, I think this is where the market goes, and because the infrastructure is so efficient, you don't have to do it at a late stage. I think you do it once you get past the proof of concept. And I think there's still a role for professional investors like this that do deep due diligence, to do these pre-seed sort of financings, to give the entrepreneurs the runway to get the product to at least a proof of concept, kind of stage. And for taking that additional risk, I think that it makes sense to get some benefit. I think these safe, type structures make a ton of sense, and I think the public sort of retail investor benefits greatly from us taking that early risk.
Yeah, I think that it's very hard to get to a token sale without any money, right? And I think a good token launch should really mean that there's at least sort of like an alpha network running, that this has been proven out, that at least the primitive assumptions of the protocol are possible. I think these things are very hard to assess. It's very technical. For your sort of average layperson, I think this is mostly going to be completely opaque. And that your ability to understand this, not everyone should be expected to understand these things. So to me, giving entrepreneurs and developers the runway to get to a successful token sale but doing that in a way where it's people that do understand what's happening and are willing to take on that kind of risk from a more like institutional perspective, I do think that's really healthy for the ecosystem.
It might be helpful, but it's temporary for now, right? Because it has nothing to do with the space. I just know how people are. If you can double your money in a couple months, everybody wants to do that. So eventually, every entrepreneur is going to go, well, why do I need to give anybody a special deal? I'll just do it and raise $20 million in 10 minutes. So, and that will run its course. I don't know how long that'll take. And then we'll have some kind of blow up in one of these. And then it'll come back to people like us who actually can sift through these and find the real good ones.
Well, but I would argue that entrepreneurs thinking that way are not taking a very long-term perspective. I just mean that the protocols that end up winning here will be worth $1 trillion. And I think that the people who are thinking about it on those terms are actually giving this a lot of very deep thought and not trying to raise $20 million today, but actually try to create long-lasting value over a decade or more.
Yeah, we don't invest in anything that we are not willing to hold, even though it's liquid. We don't invest in anything we're not comfortable holding for years. I'd rather make less investments and make large investments in the stuff that I really like than the spray and pray kind of every ICO, kind of 1999 IPO market.
Because you mean if there's a 10x in 3 months, you're not going to take your money back at least?
Oh, well, that's the one. Normally, we couldn't in traditional venture because there's not liquidity. Obviously, in this market, we will consider those things. We're different than, we're not a hedge fund. We're a venture fund. So our intentions are to go long. In most cases, we wouldn't do that. But, I mean, we're opportunistic enough that in the right situation and at the appropriate time on a case-by-case basis, we will do that on occasion.
Yeah, and to follow up on with what you're saying, Brock, I think rebalancing is a feature. That's not a bug. Like there's a reason that when you're running a fund in a totally liquid market, you actually do end up rebalancing your positions as they change at different rates. So you can still be an extremely long-term focused investor and also rebalance your portfolio.
Yeah, I think the ICOs, how they are right now, will change in future. But there's one thing I want to point out that you keep missing out here in US. So basically, it's like venture capital system outside of Europe, outside of US does not work well, and like just startups which are trying to raise money in Europe, in Asia, they will use these sort of tools to found the project, the company, the startup.
Well, that's why now what happened is you had venture capital coming into the industry 2012, 2013, 2014, more or less doubling every year, 2015. And because there wasn't real revenue being generated by most of the companies in the space, because there had been zero exits, the generalist VCs, for the most part, lost interest in the sector. They paid attention to it, but they said, okay, I've got a couple of bets. I'm waiting to see what happens here. I don't need more exposure. And so the industry flatlined in 2016 in terms of the amount of generalist venture capital coming into the industry. Well, the number of entrepreneurs voting with their feet was accelerating. And so it should come as no surprise that this model that was invented years ago only took off in a big way last year out of necessity. Because the entrepreneurs said, okay, if the generalist VCs don't want to give me money, there's a lot of us in the industry that are willing to finance these things. And that's kind of the macro driver that's the why now.
But sometimes I question whether funds have an edge because now any consumer can wait until the token is public and participate after there's a bit more visibility, whereas you might be handicapped because you are maybe you have a holding period of some sort. And as we have seen, many of these tokens are just going up before there's even a market entry, and users can make money until that time, and then. So isn't that the reality too?
So this is no different in cryptocurrency markets and in traditional equities markets. I mean, a hedge, consumers can go buy equities as well, but sometimes funds will manage those equities better than an individual. So I think in this space particularly, because of the technical complexity and how opaque the data is, there's no Bloomberg data feeds here. I think that while these are publicly available, it doesn't mean that a professional investor can't generate outlier returns relative to the average person in the space.
Yeah, but the funny thing here is that basically with ICOs, people can make money on project that's gonna fail, right? So this is something you couldn't do in before. So, but that's honestly not cool, right? In a way, because this is something. That's why I think this whole process of fundraising will change, and this is something also the co-founded project is doing with the new startups financing this way.
So how will it change? You mentioned that twice, because one segment I want to talk about is where is this going? Where do you think we're going to be in 3 to 9 months from now, let's say? So let's start with you, Tim, since you mentioned it.
Yeah, so in a way it will look more like the classical startups are looking like how they are now. So in a way that you will not raise like 20 million, like with the first offering. So I mean, it makes sense that you don't have access to all the funds, right? So basically, to protect investors, like for example, the good thing is to set the milestones of the project, so that one cannot do an exit scam and basically disappeared with all the investors' money.
Yeah, venture capital is milestone-based investing. That is what the industry is. Entrepreneurs are coming together and saying, I've got this idea, and what the VCs are analyzing, or the early-stage investor, is, what is that first major milestone that is going to demonstrate that the team has the ability to execute, that the idea is right and timely and X, Y, and Z, and if they've reached and achieved that milestone, they get the next round of capital. And the entire industry is milestone-based investing, and a lot of the investors today are giving entrepreneurs too much capital, and which means they're taking on risk that should, in theory, produce negative IRRs. We're not holding the entrepreneurs to achieving a milestone before giving them their next tranche of capital, which normally would mean that business fails, and that capital gets reallocated to a different team that may be succeeding and achieving their milestones.
Yeah, which is why you're saying, what's it going to look like in 6 to 9 months or a year from now? I think the ICO landscape will look very, very different than it is now. I think you'll have much more, let's call it, there'll be much more structure to it, much more of these milestone deals within the ICO structure, and a lot more, at least what I'm seeing is a lot more people, a lot more entrepreneurs looking to just do a sliver of the ICO and save the rest for when they actually need the capital.
But is
Yeah,
this
the other thing to add there is I think that in 3 to 9 months or 6 to 9 months, I think that the current bubble that we're in, which I believe is the case, I believe will likely have been popped.
Really?
I hope
Is
not.
this going
It
to
pains
happen
me. I
on
would
its
love this
own?
to continue on forever.
Here's where I may not agree with you, because is this going to happen on its own? You think that people are going to be rational and tighten their seatbelts on their own, or are they going to do it after there's an accident?
Well, it's going to come as it's going to be a DAO type event. You're going to have multiple deals that end up falling on their face, and the moment that I kind of envision is, well, it's entrepreneurs that are not being thoughtful and doing these ICOs, and not because they're malicious or badly intentioned, but where the retail investors are essentially being taken advantage of, not because someone necessarily has bad intentions, but you have a few of those deals where people lose money early on, IPOs that don't pop, out the gate, and then you're going to probably have one where someone rips off a bunch of money, and we see an Instagram picture on a boat, and that's that moment where all of a sudden everybody goes, okay, wait, pull back, and then once the pendulum starts to swing in the other direction, it's going to swing hard, but long term, we're in the right industry, we're doing the right thing, and that's why if you take a long-term approach and you invest in the right teams, the most important thing, more than anything, even the ideas and the protocol, is the team that you're investing in. The people ultimately that are driving these projects, early on, are the ones that are going to, more than anything, determine the outcome. Ask any VC, what is it that how do you decide what to invest in? On everybody's list, normally first and foremost is not the idea. It's who is the team that I'm backing.
But it's more difficult to do this kind of diligence when the teams are very global, and not just within a continent, but across continents. So
Distributed teams, virtual teams, open source that anyone can join the team. I mean, yeah, it's definitely complicated, but I would look very closely at who are the founders. who are the people that are kicking that off, and do your diligence.
Yeah, there still are drivers. There still are the people that are in charge, whether you want to call it, it's not necessarily centralized, maybe they don't have the title of CEO, but there are still the key players there one way or the other. That's just how we are as human beings. We're always looking for that. And I would agree, there's plenty of projects that do the quote unquote pivot, and they work out because they have a good leader in some way or another. So that to me is probably number one on the list when I'm looking at something.
Will there be anything decentralized that disrupts this model that you're currently involved in?
I think a really interesting application of smart contracts is actually investment management.
Yeah.
It's possible to basically automate most of what, if you're investing exclusively in blockchain-based assets. It's hard right now before we have synthetic versions of real assets trading as tokens. We haven't really bridged that gap yet. But right now, if you were to build, say, what Polychain does as a sort of DAO in a smart contract, I do think that is technically feasible right now. So I do think it's possible that someday what ends up replacing a company like Polychain is actually a smart contract-based system. And that someone like me might actually be employed by a DAO.
Well, there's an asymmetry of information in the market, and it's the people that take the time to do the early diligence, that sit down and have, hours and hours and hours of meetings with the founding team, asking tons and tons of questions that are done in closed rooms. I mean, in the future, maybe this is all done in a very public forum, but there is, asymmetries of information are a big driver of all of this. And I know with absolute certainty, and I can say that's probably true of all of us, normally the things that we're investing in, I have more information than everybody else. So until everybody's got a level playing field of information, this market's, I think, going to continue to operate like this.
And if you look at a history of markets, just traditional markets as well, as the markets mature, then you get more automation in it. So my view is we'll probably, you'll see it in the currency markets, you'll see it in the equity markets. A lot of AI is being deployed there now. Once that is up and running and successful, and then once the crypto markets get more mature, then we could be out of a job. Hopefully, at that point, we're all on our boats. So, I'm getting old, I mean.
Yeah, and the other reason that's going to continue, too, is if you're a team coming up with an idea and building something, you don't necessarily want to unveil everything you're doing, at the inception of the idea. You want to do your homework, get your ducks in a row, figure out what your plan is, and you don't necessarily want all of that known until the timing is right. And you're often going to have conversations with some people to test your idea, find out, is that early capital going to be available to get that project up and running to a point that it's ready to do a big public sort of unveiling. So I don't think that the early stage, call it the pre-seed and seed type investing, is going to go away anytime soon.
We can take a couple of questions from the audience if you'd like. Yes, please.
Just perhaps talk about the administration functions for these funds, the custodianship. I think we touched on that earlier, and obviously you guys are managers, but more interested in good administration.
Actually, the administration was the third thing that I should say before, because the thing is that because on blockchain, like the administration is like not super complicated, right? So that's why I forgot it. Okay, yeah. So basically, this is something what we do at Economy. So we will basically let people use these tools to run their own funds.
So, I mean, for me, we use a traditional fund administrator who has some experience in the space, but it does take a bit of skill, right? Because I went to some fund administrators and tried to explain what a wallet is, and they had no idea what I was talking about, right? So you have to have somebody with some skills, and there's one or two out there. Custody is the other issue, and William, you asked earlier, can anybody open up a hedge fund and do this? And the answer is yes. But a lot of traditional hedge funds can't take custody of that asset, right? So the more, especially if it's deemed a security, and if you're running a multi-billion-dollar fund, I'm not sure that you want to necessarily take that risk, because if you're holding a security, there's a lot more capital that you need to hold, a lot more regulatory scrutiny that you're under. So what this space desperately needs is similar to something that Economy is doing, is that infrastructure. It'd be ideal if it's on the blockchain, on a blockchain, but that's what the space needs. The infrastructure for fund management is still very, very immature.
Yeah, and also if this is a new asset class, then I mean regulators should figure it out, like how this should be done in this asset class.
Yeah, the only thing that I'd add to that, we're traditional sort of fund administration, but there's the security component and the security auditing and third-party sort of aspects. Security in this industry is paramount. It's more important than any other asset class because it's we can have DAO-type events, and so that's the only other kind of key thing. And I think all of us as investors, you want to make sure that there's essentially a third party doing these security audits, and that's another thing that I think we as investors do. We provide sort of signaling. Early on, hey, we've done real diligence, this deal's been vetted. It doesn't mean, I'm wrong 49% of the time, and it doesn't mean we don't make mistakes. But, you've got someone that's done deep diligence. I think that there's room for the, the Argons and the token markets and, kind of having, a third party sort of, what looks like investment bank almost in some ways. These are things that are validating a deal, that should give all of us some degree of comfort.
Great. We can take one more question over there. Yes. So just to say the question again, it's about the metrics that will be in place.
Yeah, so there's really two stages. If it's pre-launch, you're not really looking at quantitative metrics. You're looking at pretty much exclusively a qualitative analysis of what that protocol could do. I think once these things are live, there's a few core things you can look at that are relatively simple. So the number of transactions occurring in the network, number of outstanding addresses that have a meaningful balance. And these things start to estimate really simple things, just like how many people are using this, what does that user base look like. Now, it's pretty different because, as the audience knows, it's not one address equals one user, right? It's much more complicated than that. But I think generally, these are pretty simple public metrics available by parsing the blockchain data.
Well, there's some other good metrics that are out there, too. How many people are talking about it on Reddit or Bitcoin Talk, and how many people are in Telegram groups or Slack groups? And those are, good data points if you want to see, how popular something is looking. And that's data that's available to everybody. And I think probably one of the early, good metrics is how big a developer community does it look like this project is going to have?
Yeah, I mean, that's where the network effect starts, right? To me, if I'm looking at something, I want to have an active Slack channel, Telegram channel before the coin's even trading. Because to me, that shows me there's a community there. And without that community, without an active network of people, of human beings that are actually going to use this and support it, it's going to be very difficult to achieve that network effect after the token's launched.
Okay, so closing comments. Again, we touched on the future just a few minutes ago, but really, a year from now, what do you think is going to change in what you're doing or in this environment? Because I'm hearing, again, my theme is here that here comes everybody. Everybody now can do funds, everybody can invest, everybody now can help other ICOs. It's good and bad. It means that it's an inflection point for growth. And kind of how the internet started and the web back in 94, 95. So where do you think we're going to be a year from now?
A year's a long time in the space.
4 years.
So listen, a year ago, if you had asked me that, I would say it's probably 5 years from institutional investors coming into this space. They're coming in now. So I was wrong about that prediction. So what are we going to look like in a year? I think you're going to see a lot more traditional fund manager in this space. I think you'll see the space mature dramatically. There'll be some growing pains, without a doubt. But I think you'll see a lot of different investment options, and I think that's good. I mean, just like you see in traditional markets, there's different strategies here that work. There is no necessarily a holy grail. So you will see an array of ways that you're going to be able to get exposure to this new asset class.
I think right now, all of the sort of projects, for the most part, are things that are endemic to the industry. The ICOs are stuff that's something related to blockchain in some way. I think the big thing that's going to change is you're going to start to see non-blockchain related startups and ideas coming into this market where it's not just the endemic industry, but the non-endemics. And that's where this technology starts to be something more than all of us drinking our own Kool-Aid.
Like Kick this morning. Like Kick They are not from the blockchain industry.
Kick is the first example of something that's not. I mean, their project intends to be something that's really a blockchain-related project long term. They're just coming in with a 300 million user base and a lot of things going on, which I think is incredibly interesting, and I'm very excited about it. But I mean, traditional securities being sold this way by companies that have no intention of, or there's no specific blockchain component, to their business. And I guess the only other comment I would make is I'm one of the founders and head of strategy over at EOS. Check it out.
Yeah, I think to add kind of to what Brock said there, I think we're going to continually move up the stack, and I think we'll start to see some of the first sort of consumer-facing applications become popular and viral because they actually monetize user contribution to those platforms. I also think that the things that we're looking at are going to become basically more and more and more kind of sci-fi feeling. Like I can't believe this is possible because every about 2 or 3 months in this space, my mind completely changes about what's possible because new technology comes out of absolutely left field, and I'm very eager to see the things that come out in the next year.
Final.
I think that everything is going to get tokenized, and we will see new sort of assets that were never seen before.
Great. Thank you very much, everybody.
Thank you.